You see that all the time when these OnlyFans girls are having a whinge. Oh, I got a $300,000 tax bill. Yeah, because you made 700 grand.
There's no way that you can pay more tax than you actually get in your pocket. If you make $100,000 more than what you did last year and you pay $45,000 worth of tax on it, you've still made $55,000 extra. A lot of people will make bad decisions financially because of that pressure. Buy stuff they don't need because it makes them feel good or makes them look like they're doing well. If you don't need a car, don't buy it. That's not going to help you succeed financially.
End of financial year's coming up. What are guys having to do to actually prepare?
I'd suggest...
Welcome to the Better Bloke podcast. I'm Matty.
I'm Rob.
And we're just a pair of average blokes on a mission to try and be a little bit less average.
We're going to speak about all things highs and lows of what it feels like to be a bloke, plus speak to some legends along the way about what it takes to be a better bloke. Let's get stuck in.
Everyone's favourite time of year, it's tax time. So when it comes to tax, there's a lot of, things to think about. Obviously, you got your deductions, everyone wants some of them. It's company setups, it's all things finance. And that can be a bit of a different language for some of us, including us too. So we got on someone that knows a little bit more about it. Jason, owner, founder of Boutique Business House. He's on board with the Better Bloke project. He's helping us get our shit together. So he's come in to answer all our questions. We've asked some of the boys in Bloke's Advice, what are your tax questions?
There was a couple that came up, but I think before that, let's find out a little bit about you, Jason.
Yeah, perfect, mate. Thanks very much for having me. It's a great topic, one that I'm very passionate about. It's also can be quite boring, but obviously we'll try and make it a bit more exciting today. So, yeah, for me, been an accountant for 16 years now, I believe. Originally from Tassie, so don't hold that against me. Moved up to the Gold Coast, 09.
Is that what the scar there is?
Yeah.
Yeah.
Well, I got rid of that when I moved up.
Yeah, nice.
So we moved up to Golding 09, worked with KPMG, a big accounting firm around the world on the Gold Coast. And then 8 years ago, just recently, moved out and did my own thing, a boutique accounting house, part of the Boutique Business House group. And yeah, that's me, essentially. Got a couple of young kids, a wife, live in Talai, and yeah, it's great.
Yeah, normal bloke. That's the thing. Everyone we're working with, we're trying to get guys that are like our demographic. You're a footy boy from way back.
Yeah. Played AFL down in Tassie. Played up here with Labrador on the Gold Coast. Love my AFL. Richmond supporter, but unfortunately they're going terrible this year. So playing golf now. Playing a lot of golf.
Golf.
We just spoke about that.
Told you.
So yeah, golf's my escape, I suppose. I go and play golf, put the phone away. Switch off and enjoy getting frustrated at a golf ball.
Cool. Well, a lot of people get them frustrated at tax time. How was that segue?
That's
was
a great
perfect.
segue.
Perfect.
Pretty good.
So let's have a look at this. Like we're in June. End of financial year's coming up. What are guys having to do to actually prepare? Like it's not like the end of financial year comes and the tax man's at your door. What should people be doing now to get prepared? Yeah,
it's a good question. I suppose you're right. It doesn't turn July 1 and, everything's got to be done. But the planning you do prior to 30 June is important. In a lot of cases, there's not a huge amount you can do. Like you can, we'll go into a few things, but if you're just a normal salary and wage person and you've got your deductions you've spent through the year, well, you're pretty much prepared as it is. You just need to keep records. But as you go through maybe a higher paid person with a more important job, a more onerous job on expenses and things like that, more record keeping is important. But then you go into the business world and there's probably more and more you need to do. Timing wise, if you don't go through a tax agent, you lodge your own tax return, which a lot of people do. I'd suggest going through a tax agent. It might help you get a better result. But if you do it yourself, you've got to the 31st of October to get it lodged. If you go through a tax agent, there's different dates, but most likely 15th of May to get it done. So you've got 10 and a half months after the year end to actually get your shit together, I suppose. So that's a timing wise. In general, if you've bought stuff throughout the year for your job, keep the receipts, document it. It doesn't matter if it's $30 or $3,000. You should keep your receipt because the ATO can come knocking if you get audited.
With keeping your receipts, like, is there any tips or tricks that you have? Because I know there's going to be a lot of boys that are listening and women that are listening. Any ways that you recommend keeping your receipts, like, keeping a folder or taking photos, or like what's the go with that?
Yeah, there's old school ways like just keeping a folder of receipts. They can fade though. I'm pretty sure they make receipts to fade now. So I have had this with a client. They provide all their receipts, and when they provide them, most of them were blank.
Just white pieces of paper in a folder.
And like you could kind of just see little bits in, if you held it in the light, but that's not going to fly. But so that's an old school way, probably not the best way.
Yeah.
There's so many apps out there now, like Dext is one we use the most, mainly for businesses, but it's very common to be used for individuals as well. If you want to keep the receipts, Dext will store them into either in Dext, or you can push them through to Xero, which is an accounting software which a lot of people use. Sole traders use Xero, businesses use Xero, so it folds in there and just allows you to have a digital copy that can't fade, and it's recorded there.
Yeah. So photos can hold up for tax
Oh,
time.
100%. Yeah. As long as it's a legitimate receipt,
Yeah.
then that's perfectly fine. And then it matches with your bank statement, so the ATO come in and say, that's great,
Yeah.
happy days. So that's what I'd suggest there.
That probably comes back to, and this one's a bit left field, but you just said goes back to your bank statement. So that sort of stops the boys from sharing receipts if they've bought. And like, does that come up a fair bit? Because I know that's, the boys on the tools, that sort of happens a little bit.
Yeah. I mean, yes.
Yeah.
If you were to get audited, I mean, the Australian tax system's a self-assessment system. So even if you go to a tax accountant to get your work done, the person signs off it as they're self-declaring this is all right.
Yeah.
Okay, so you're having a professional help you put it all together, try and maximise your benefit or minimise your tax. But at the end of the day, you're signing off on it. And if you were to get audited, and the ATO can go back 4 years, if they find something fraudulent, they can go back forever. Then, yes, they might say, right, give us your top 10 invoices of income and your top 20 of expenses. That might be in a business sense, or they might go give us every single expense you've claimed in your individual tax return.
Yeah.
And at the end of the day, the ATO is right. You've got to prove them wrong. So they'll say it's not deductible. You need all the evidence to say it is. So yes, you'll need an invoice that's most likely directed to you. But if you go to Bunnings or something like that, then it's just a general invoice.
Yeah.
They would then match that up against a bank statement. So again, if it's paid by cash, harder to track. I'm not sure what they do in that situation, but ideal situation is invoice, bank statement, all matches up. You've actually got the physical tool as well.
Yeah.
All those sort of things. But the idea is not to get audited, right? You don't want to be in that position where you have to provide all that sort of stuff. So minimising tax is the best way, but doing it as best you can is obviously the main part.
So the best way to not get audited would be to go through someone like you.
Correct. Yeah, like a reputable tax accountant or tax agent is the best way to go. I don't know what the rates would be, but there would be a much higher audit rate in lodging it on like an e-tax or paper version by yourself, whereas you're going through a tax agent that's got their tax license and can help you minimise tax. Like that's our job, is to help minimise tax. It's not to help remove tax, because that's never going to happen. And I think the biggest takeaway for a lot of people is, and Matty and I have talked about this in the past, and it's controversial to some people, but paying tax is a good thing. Paying too much tax is a bad thing. You want to pay the right amount of tax for you. So if you're paying tax, you're making money. That's essentially what my core value is to people. Is like, when people say I want to pay less tax, I'm like, okay, we can pay less tax by getting these plans in place. But I actually want you to pay more tax. Not more percentage tax, but more tax, because that way you're making more money. You're driving more value for you, your family, whatever that is, to fund your growth of a business or to provide a bigger house for your family. There's a lot of misconceptions in how tax works, and I'm sure we'll touch base on that. But the more money you make, yes, you'll pay more tax, but you'll also get more money.
Yeah, you see that all the time when these OnlyFans girls are having a whinge. Oh, I got a $300,000 tax bill. It's like, yeah, because you made like 700 grand. Like that's not a bad thing.
No,
Like,
one of the biggest ones we see, and I hear it all the time, especially around tax time, and it's not so much from those businesses that have been there, done it for years. It's potentially the sole traders that have turned into businesses, or the individuals that are coming through and they're they're saying, "Oh, I'm paying more tax. Why is it worth doing that extra work?" Well, yes, the ATO will take a slice, and as you earn more, that ATO will take more of a slice. But you're still there's no way that you can pay more tax than you actually get in your pocket. The top marginal tax rate's 45% plus 2% Medicare levy. If you don't have private health, it can go up a little bit more, but it's not going over 50%. So you've always got don't get me wrong, that's high, and it's one of the highest in the world. But if you make $100,000 more than what you would, if you make $100,000 more than what you did last year and you pay, I don't know, $45,000 worth of tax on it, you've still made $55,000 extra. You know, yes, you got to think, was it worth it to do that extra week? It might have taken you, 60, 70% more time. Well, maybe that's the offset. If you can earn that much money more by not putting any more effort in over and above what it would normally take, I'll take $55,000 in my bank account every day of the week.
I don't think anyone's saying no to that.
Well, they kind of are. Like, you hear people saying, oh, like, especially with the second job thing, because they don't get that first 18K tax concession. So they start getting taxed at the higher rate, and they see this money coming out and they're like, oh, I'm getting taxed so much. It's like, yeah, but end of the day, you're making more money. That's the point of the second job. So you are better off.
Is that sort of where it comes? And like, you'll be able to sort of pull me up here if it's a misconception. With that whole second job thing with tax and getting taxed at the higher threshold, is it somewhat of a, I guess, involuntary savings because you're probably going to get some of that?
Yeah, it's a fair way to put it. Yeah. I suppose Matty hit the nail on the head. Literally, the second job, all it is when they do their tax calculation in the back end of the job, they are not taking into account the $18,000 threshold because you've already claimed it on the other job. So you can't claim it twice. It's not per job, it's per person. So if I have a job earning $100,000, I'm claiming the $18,000 threshold. So they're taxing me on $82,000. Whereas on the other $100,000 job I've got, they tax me on $100,000.
Yeah.
So yes, each pay, if you've got the same here, each pay is going to be different. There's going to be more tax in the second job. But when it comes together at the end of the day, it's all combined into one calculation for $200,000. We as a tax agent work out what that tax is. We make all the deductions required for both those jobs. And then it's calculated on the net value of both those jobs. So yes, there could be some savings. Also, the systems, if it's two completely separate industries, sometimes the systems won't understand that you've got another job either. So they'll still tax you at the rate you're only earning $100,000, but you're actually earning $200,000. So you actually might be taxed less than what you would normally over the whole time. So it can work in both instances. You can have a bit of a tax saving, but you can also have a tax debt if you don't talk to your second employer and say, this is what I'm doing. That's why you should come and talk to your accountant and say, hey, I've got this other opportunity. What do I do? I've got a legal client, and they come and talk to me and say, this is my pay, this is my bonus. What do I need to do? How much am I putting aside? It's all about planning. It's small minor thing, and there's an employee. They've got no business, but they want to talk to me about how they structure themselves so they don't have a tax bill at the end of the year. And I suppose that's a big part of this conversation, I suppose, is minimising tax, but how do you deal with when you do have tax, or you've got a plan for that sort of cash flow?
I guess planning's the big thing there, because it's not as if tax time, people can say like, oh, it sneaks up on you and whatnot. It's the same time every fucking year. Like,
It's a good way to put it.
The guys that are probably going to listen, it's like they may not listen to this episode until after this tax time. Start planning next year's now.
Oh, 100%.
Like, back on the record keeping, that's kind of important because that has to be happening throughout the whole year.
Yep.
Back on that, so I keep records of my big purchases. So if I'm, camera equipment, stuff like that. But there's also deductions that you're allowed up to some sort of threshold in terms of maybe transport or fuel, phones, stuff like that.
Again, there's like this, and it's a little bit of a misconception. At the end of the day, the ATO wants you to keep everything, right? In an individual tax return, it's anything over $300 in total, you need to have your receipts. So if you have, you're a school teacher and you've gone and bought, you're a PE teacher, you're out in the sun all the time, you go and bought a hat and some sunscreen and stuff, and it comes to like $250. You put that through the tax return. receipts aren't that important. But as soon as you go over $300, you need receipts for everything.
Everything's over $300 nowadays.
Well, exactly. You can't get much for under
Is that
$300.
300 like per category, or is that 300 total?
Total.
See, because I think that's probably a bit of a misconception.
100%,
where,
yeah.
Like boys can go, okay, yep, $300 on PPE,
Yep.
$300 on tools, $300, and they think that because they're
Yep.
staying under that $300, that
Yeah.
they're
You're
fine.
right. 100%. It's a bit of a misconception, and that's important to understand that. Yeah, it's. I mean, $300. What can you get for $300? You couldn't buy a pair of work boots for under $300, so you're done. You know. But in saying that, if you have the right tools, and you are spending money on work, you should put those receipts and stuff away because you'll get the deduction for it. And if you're earning over $180,000, and there might be some people out there that do this and have to spend a fair bit of money, that's 45 cents back on the dollar if you're doing it for a legitimate reason. You know?
Well, that's a good one to get into because
Yeah.
when we went out to the boys and said, all right, we're talking to a businessman and we're going to answer all your end of financial year questions, the overwhelming amount was, how do I pay less tax? What shit can I write off? How do I write it off? How do I get it down?
A lot of jet skis.
Yeah. Plumbing jet skis. I think they called it an industrial water recycler.
I've heard it a fair bit. Yeah. it's a common one. I mean, at the end of the day, anything to be there's a few points in here. Anything to be deductible needs to be linked directly to how you're earning accessible income. If you're the rider at jet ski at SeaWorld in their show, probably deductible.
There was one guy that had a pretty fair sort of way of doing this, and he was in electrical, and he said he started a branch for his company, Marine Electrical.
Yeah.
And he went into servicing electrical on boats, but then after purchasing the jet ski, he ran his numbers and found it wasn't a very profitable sort of side to his business.
Yeah.
So he went back into residential.
Okay, so they just kept the stock.
Oh, I mean, it's already bought, so you may as well keep it.
Yeah. Well, yeah, there's a whole thing of that, but I like his thinking. With back into the original question around what's the point of going out and buying stuff, right? It's probably the number one question I get at this time of the year between now and 30 June. The question will be, if I just go and buy this, and this, that'll help me for tax. So it will, if it's related to your earning income. But you've got to also think, do you need it? Because if you don't need it, you're not getting 100% deduction for this. Like, I go and buy a $2,000 computer, even though I've got one that works perfectly fine. I don't need it. I'm just going to buy it because someone's told me at the pub that's going to save me, I don't know, $600 in tax, right? True, if you're in that certain tax bracket, true. But you've cost yourself $1,400 to buy something you don't need.
Yeah, so it's probably better in your pocket if you didn't need it in the first place.
Correct.
It's 100% better in your pocket. There's no situation where an accountant's going to tell you have to go out and spend a certain amount to pay less tax.
No. The only reason you should do it is if you need the tools. Like, all right, I'm going to go buy a jackhammer. It's going to cost me $2,000. If you need it, 100%, go and buy it. You need it to do your job. That's an investment. The $1,400 is an investment in your job, right? And the ATO give you a benefit of $600. Again, round numbers, but $600 to buy that equipment. If you don't need a new jackhammer, don't go and buy it. We won't tell you to go and buy it. Well, I won't anyway. I'm not sure about other accounts, but most of the time they won't tell you that. There's some really good deductions. Like, I will say, hey, Matty, you can if you put $10,000 into your super fund, you can get a deduction before 30 June for that, and that's going to save you $300 in tax. But it's also going to you. It's going to your fund. So you've saved $300. Yes, there'll be a little bit of tax in the super fund like normal, but you're going to be better off overall, and the money's gone to you. So it hasn't gone down to Snap-on tools or whatever it is. This is money that's going to your benefit. Yes, you can get it in. And a lot of people say, I don't want to do that because I can't touch that for 30 years. But you've got to start planning for these things so that you can finish work when you're not 70. But there's those sort of things.
Okay, on that, what are some other, I guess, tax concessions or deductibles that people don't know about so much that you do try and utilize in when you're doing returns?
Yeah, look, there's two parts to that as well. Let's talk about the ones that people do know about but have changed. So this is more for ABN holders, so sole traders that have ABNs, also businesses that have ABNs. In the last few years, you've been able to write off motor vehicles under a certain threshold, but the threshold's been 150 grand or more for a few years. So go and buy a $45,000 ute for work, related to your work, you could write that off in full in the year you bought it, which means it saves you a fair bit of tax in that year. That rule's now come back to $20,000. So anything over $20,000, again, I'll go and buy a $45,000 ute. I've got to depreciate that over the life of the ute, which is eight years. So you still get the deduction, and it's no more deduction than you would have got, but you have to spread it over 8 years, not straight away.
That's a bit of a dog move on them because you can't really buy a car under 20.
You can't. It's not just for cars, though. It is for all other equipment. So that part. But yes, the car, there's going to be so many people that are maybe were planning for cars. Even people that looked at buying cars prior to 30 June last year, but their car didn't arrive till this year. It means they don't get the full deduction because it came in this current year, the 2024 year. So the other flip side of that is another people, and again, talk to your accountants about this because when you do sell that car, and if you've written the whole thing off $45,000, you're going to be taxed, and you sell it for $45,000 because it's held its value, so Hilux, whatever, you're going to be taxed on that $45,000 when you sell it.
Yeah, shit, that's not something that probably everyone thinks about, so it sort of comes back and...
Massive one, yeah, because you've written it off, and you've got the benefit. But if that asset holds its value and then you sell it, you got to pay the tax on it. So if you go and buy a car in the same year and you get the depreciation, but this is when the misalignment's going to happen because you sell it for 45, you can only claim, I don't know, 8 or 9 grand in 1 year. There's going to be a misalignment. I'm in the exact same position. I've got my car and I'm like, I'd love to upgrade it, but I don't want to pay the tax on selling it. So
You've got a Hilux, so I think the takeaway is buy a Triton.
Oh, mine's unbreakable.
It's going to devalue itself to zero.
I mean, I don't want to go sort of hanging shit on any brands because we're still looking for a van. So,
Mitsubishi don't make a van. The Express, and I don't want that.
Yeah, okay, fair.
Yeah.
Okay, there you go.
Stick with Toyota, nice Hiaces.
Oh, yes, yeah.
There we go.
Available. The guys are keen. So, but so there's a side of that which is a known deduction, right? Everyone knows that you can do something with your car. There's other ways you can get cents per kilometre, which is an easier method. There's a logbook method to claim the depreciation of your car. A bigger conversation, but there's those available deductions. Other ones that people know, and I know we're going down more of a tradie sort of side here, but tools and equipment and all that sort of stuff. If you use them for your job and it's under $300, you can claim it straight away. If it's over $300, you need to deduct it.
Yep.
Depreciate it. Sorry, not deduct it. So yeah, again, go and buy a handsaw for $300 or $299, you can deduct it. If you buy something for $1,000, we need to depreciate it.
You can only do that once in a tax year, though.
Correct. You can deduct it. Do you mean deducting it?
Well, is that the same $300 level as you were talking about before?
This is a different thing.
Okay.
So sorry, same number but different. So the $300 for that is just the value of that.
Okay, so you can buy multiple things for under $300, deducted in the same year,
and have the receipt. So I buy 5 items for $200, deduct. If I buy one for $1,000, depreciate.
What's the rules on depreciation, and how do you actually do that without going?
Yeah,
I just go to an accountant, obviously.
Yeah, of course, it's easier to do that. But I mean, essentially, at the end of the day, the ATO for almost every item you can think of has a effective life. So for a laptop, 3 years. All right. I'd have to refresh my brain with all of them, but let's say the laptop's 3 years. You go and buy a laptop for $2,000. You can get that'll depreciate over diminishing value over 3 years. So you might get it's a concept. It sort of times it by 2, but you might say you get I don't know 3. You might get a $500 depreciation 1 year. Then the values come down, and it depreciates that value again. So diminishing value means it keeps going down. It's quite easy, and most of even the online systems you do by yourself will calculate it for you. You just need to have the purchase date, the cost, and the effective life is the main thing you need to be able to get.
Yeah, that's like the category of it or something.
Correct, yeah. And every item you can think of, fridges, cars, all have an effective life that the ATO says this is what it is. Coming back to like unknown ones, I mean, there's not a huge amount of unknown ones, and like to be honest, the ATO is pretty switched on to everything these days. Like, so when I go into a tax planning meeting with like more businesses we do tax planning for, but if an individual reaches out, then the super one, which I've talked about, is a good one. You've got your laundry and cleaning of your uniform. So you guys are wearing your branded shirts, for example. Great shirts they are too, by the way.
Amazing.
Because you've got a shirt with a logo on it, you obviously need to wash that. That's something you can put through your tax return. Now, again, the ATO wants you to record all this sort of stuff in the background. People keeping spreadsheets for doing their laundry. I hope so. Don't know if that happens, but yeah, you can claim a bit of running costs on that. Another one that's been pretty prominent but has changed this year is those people that work from home a lot.
That's probably something that since
since
the
2020, really,
since COVID, and everyone sort of got forced into that.
Yeah, so it has changed multiple times. But as of 2023 and 24, they've cracked down because there was a couple of years where they're like, yeah, just keep track of how many hours you did and times it by 80 cents for every hour you did at home, and that constitutes your running costs, right? So people did that a lot. The ATO's now said you need
a lot of people were taking the piss with it.
100%.
Not me.
No, of course not. But that's changed again. Like now you have to really have a spreadsheet saying what hours did you do at home, what days, which is not hard to do. If you want to claim the deduction, do it. Like have a spreadsheet. I worked 5 hours from home. I worked 10 hours from home. And the day it comes to 1,000 hours, we can put 1,000 hours in at 67 cents. I think it's gone to. So it changes every year, which means there's a $670 deduction, which means at your tax rate, again, if you're at 30%, what's that? $200.
Yeah, 200 something bucks.
Let's call it 200. So there's a $200 saving for doing those, which you might as well do if you're legitimately working from home. Why not claim it? But one of the misconceptions there is if you claim that method, that's the shortcut method. Then you can't go, oh well, I do podcasts at home, so I can't claim my desk and my chair and all this sort of stuff. There's a shortcut method, and then there's I'll do everything at a certain rate method. So again, talk to your accountant around that. To maximise your benefit. Our job as accountants is to just try and minimise your tax, which means maximising your benefit. We're not going to be able to remove your tax, and if I remove your tax, you probably made no money. So I don't want you. I don't want to.
And go to jail.
And probably go to jail.
Yeah.
Yeah,
So-
I think that's sort of something that I'm picking up from, I don't know, just this short conversation we've had so far is I've always done my own tax online. I just bang it out online. It is what it is.
Yeah.
Both of us are in different situations. You've sort of been in that business owner type scenario, and I've always just been an employee, so I've never really seen the benefit of
100%.
going and speaking to someone like you.
Yep.
That's probably changed my outlook just from this short conversation.
I've been big on accountants for a long time, just from an organisation perspective. Do you remember the first time we got involved as an accountant? So I was sole contracting, just doing film stuff, and I wasn't keeping my tax aside. I kind of was, but then I spent it all on an overseas holiday and stuff because I figured I'd get it back. And then just, I had some hex there as well going on it, and it just all totaled up. And then I get this message from the ATO, oh, I'm 16.5 grand. I'm like, shit. All right. I went to you, and just because you were able to actually go back through a couple years worth of my shit, sort of, you didn't claim this, you didn't do this, whatever, minimized it all the way down to, I think it was under 5. And then I could figure that out over the next 2 years, something along those lines. And I'm like, okay, it is definitely worth having someone who knows the ins and outs doing this, because I had no clue. And then also, isn't accountant somewhat tax deductible?
100%. Yeah, your tax fees are deductible as well. So
it actually doesn't cost you that much.
No. And do you know what? Donations to charities are deductible too. So, things like that.
Handy thing to know.
Things like that is, and why would you, if you've got a spare $1,000 sitting in your bank account and you don't want to pay the ATO $250 of that in a company sense, give the money across to a charity, and you get the deduction.
And
So-
we get to go to sweet events and teach boys how to be better.
That's it. So there's that part. But like, I suppose, touching base on what you said around planning and yes, the individual side is a big one. And there's nothing wrong with doing your own tax return. And a lot of people do that when you're in an employee. A lot of people say, what's the point of paying $250 for someone to go and do my tax return? I can do it myself. Well, if I can save you $250, well, you've won.
Sort of an investment then, isn't it?
Correct. I suppose the bigger picture of this is when you've got like sole traders or people that start their own business, or got a building company, which is very topical at the moment around how hard that is. The pressure can come on you pretty quickly when you're not managing that process, the tax process, the income cash flow process well. And outside of just tax deductions, like someone like our firm will dive in with business owners and go, what do I need to do? What do I need to put aside? How do I control my weekly payrolls, my PAYG? Because let's list off what you need to put. I'm a business. I've got staff. I've got to put away each pay run, super, which is 11.5% next year. PAYG withholding, which is the tax on an employee's wage, which can get up pretty heavy. GST, if I'm registered for GST. So there's 3 already. Bigger businesses, payroll tax. Like they go on and on and on. So if you're not managing that correctly, and again, our job is to minimise as much of that as possible, but if you're not managing it correctly, that can put a shitload of pressure on you as a person or a business. If you get in a hole with the ATO, and a lot of people have this mindset, it's the ATO, they'll just fund me. That only works for a certain amount of time. They'll come hunting.
Yeah.
Director penalty notices, you're personally liable for a lot of those things. So really what we try and do is manage our clients to say, let's get in early. I'll tell you how much each week you need to put away for this, and this. Put it aside. Now, if shit hits the fan in the business and you need to use that money, that's not the end of the world, but try your best not to touch it. Because when we turn around each quarter and say you need to pay your BAS, which is your GST, PAYG withholding, and that's 30 grand, you've got no money to pay it, that's just one quarter. All right, we deal with it. Put on an ATO payment plan and we work with you to get it sorted. But if that goes quarter after quarter after quarter, soon enough you're $100,000, $200,000 in debt with the ATO, and there's nowhere to go. It's hard to get out of that. And yes, there is people that deal with liquidation and all that sort of stuff, but we try and make sure you don't get to that stage. Almost like you're saying, don't fix the end result. Try and stop it at the start.
Yeah.
Similar to what you guys are doing. If we can manage that process with the client, get the financial pressure off, that's going to make the life of the business owner a lot better. Like I go through it all the time. I have so much pressure on myself to make sure business is working well, to support the family, to do all that stuff we want to do. So I can only imagine what other business owners go through as well.
Yeah, and that's coming from someone that the ins and outs. That's your job, and you're still feeling those pressures. So
there's so many boys in the group that they might be a fucking amazing builder or plumber or whatever, and they've realized they can make more money doing their own business, but they lack the financial literacy.
Well, and that sort of just comes down to like what we're pushing with the Better Bloke project. It's like lean into the guys that know that. Like that's why we've got you on, Jason, is the whole, you know this space better than us. We want to get you on so you can sort of speak to the boys about this. And
100%. And more than welcome to come back anytime you like. But I suppose for me, it's seeing what the non-management of it can do. I won't sit here and talk about tax deductions and stuff all the time, but I suppose the real core part of it is at an individual level or a business level, it doesn't matter. The planning and the buy-in to the whole financial process is the key. If I can go to sleep at night knowing that I've got my debts covered, I've got my business is where I want it to be, whether it's growing or I want it stable, whatever it is, and that's a win for me. That won't take away different stresses of the business, but financial is one part. And, someone like our business, there's plenty out there, but our business focuses on that part more than anything else. Because anyone can lodge a tax return. Any accountant can lodge a tax return and put deductions in it. That's easy. I'm sure AI will be doing that for us in 20 years anyway. I'll be doing the whole
20 years, 2 months,
well,
mate.
individual tax returns probably 2 months, but more on that. But so the future of accounting is accounting and advisory is in that advisory space, and that's actually helping businesses grow and understanding what pressures they are under. And Maddie will know this, but I've worked in businesses as well. I know the pressures business owners and employees of that business go through. Whereas a lot of accountants sit back there and, here's your tax bill, deal with it. Why didn't you have the money there? What do you mean you didn't put it? You had to go and buy this equipment to make the business work. Whereas I sort of understand, and our team understands that there's more elements to just here's your tax return.
Yeah, and I think that's such an important thing to know is like everyone that we're sort of working with as well, like yourself, for example, it's that relatability side where you're one of us.
Yeah.
You're one of the boys.
I'm average, like you said. I'm very average.
And
Ask my wife.
That's what we're led into. Yeah. So, but like, I think the fact that you can relate to all that and like you can have those conversations, but at the same time, you are a professional in that space. Yeah. It makes it so much easier to maybe those boys that have been maybe not afraid, but they've been hesitant to actually go, okay, shit, I need to speak to someone in that space. Yeah. You're right here with us. Like, this is probably the best endorsement that we can do to go, you're one of us, like, you know what you're doing.
The best endorsement is talk to him and then he'll write off his services to tax and you'll save money.
Everyone's a winner.
Like, literally when there's a no loss situation going on, it's great.
And I think I'm very passionate about the extra stuff. Like, do I want to be doing individual tax returns for the rest of my life? No. And I don't do that many. But I get so much joy in actually helping businesses grow and find opportunities and help them through the process of managing. Like Matty, for example, each quarter he sends through his stock count. And a lot of people do that 11 months after the fact. I say, Matty, send me your stock count. I'll put it through. I'll work out what tax where we're sitting. Make sure that's aside. So we're planning 11 months in advance. Which
doesn't surprise me about you, Matty. To be honest.
That's why we're not buying a burnout car, mate.
Just a switched on unit. That's what he says.
I'm sure if we're going to buy a burnout car, this is the man to speak to, though.
He keeps sending me Facebook Marketplace ads of like some clapped out V8. He's like, advertising?
Yeah.
I'm like, we'll get there. We'll get there.
There you go.
Something was spoken about offline and you kind of touched on it then is, I guess, the impact money has on blokes. Money's not the be all and end all. It shouldn't be your driving force in life, but we can't get away from the fact that it is important.
Yep.
As men, I think a lot of us do feel like we're providers. We're trying to provide a stable place. So having the money and the finance side of things in order allow you to feel like
it's less pressure if it is in order.
Yeah, it makes you feel like you're doing your role as a man, and I'm sure like women do finances too. That's totally okay.
Yeah.
But definitely when men feel this pressure, if they are falling behind on that, that snowballs into feelings of inadequacy, and it can have some really quite drastic consequences.
Yeah, massive. I think, we've seen it. We've seen it firsthand. The people that don't manage that or have bad luck. There's some bad luck stories out there. You lost contracts, whatever it is, and it just happens. The impact that has on them and their family can be heartbreaking, really. What you can do is obviously talk to the likes of yourselves and from that state of how can I help myself, talk to a professional in the finance world about the finance stuff. There's other areas of business that are impacting as well. But yeah, it's all comes together in putting the pressure on yourself. I think a lot of people will make bad decisions financially because of that pressure. They'll make a bad decision on going buy stuff they don't need because it makes them feel good or makes them look like they're doing well. I think we talked about, getting these cars and, if you don't need a car, don't buy it. Don't go and buy a flashy car just because you want to. Like, that's not going to help you succeed financially. Yeah, it'll make you potentially feel good for a short amount of time over here. Maybe so does hiring one for maybe the weekend. Going back into making good decisions or making bad decisions financially can hurt relationships as well, which is going to impact the family. It's going to impact your mental health as well. But yeah, ideally, you're talking to the right people in the right space, whether it's through likes of you guys or through an accountant that understands the numbers and how you just don't get to that space in the first place.
Do you see like many boys getting into that situation where they think sort of, I know we spoke about this a little while ago with like getting into debt to get out of debt type thing. Do you come across that much?
Yeah, heaps. Like
trying to dig
the snowball. You mentioned before the snowball effect of just chasing your tail. Debt's bad. Oh, debt's bad unless it's good debt, which is not that many good debt. Like if you have a debt on an investment property, you can claim the deduction of the interest against your investment property. Great, but the best debt is no debt.
Yeah.
If you can buy everything with cash and not have any debt, that's the best situation because again, any debt you have, the interest is only deductible. Like let's say you pay $10,000 in interest, you're only saving, let's call it $3,000 of that debt again, like that interest. You're not just because another conversation I have, and again it's around leasing cars, which you mentioned before, Matt. Like I'll get this car, I'll just lease it because I can claim the interest. But if you've got the cash there, go and buy the car, or don't buy it if you can't afford it. It's about knowing your limitations. And car finance people might not like me for saying that, but it's about staying in your lane, in your limit, within your limitations of what you actually need, because you're not getting a huge benefit from paying interest. The only people that benefit from that is the banks. The banks are loving you going and leasing a car for $100,000 and paying
14%.
Yeah, 14%. Yeah, ridiculous numbers.
Yeah, crazy stuff.
Banks, they got enough.
Yeah. The minute we talk about any of this sort of stuff, the comments sort of light up.
Yeah.
Because everyone's like, oh, what about this exception? What about this exception? I get it from, people do it from a cash flow perspective, which I think makes sense.
Yeah.
Like if you're a tradie and you genuinely need, say like an Iveco, like big car going to cost you $100,000, but you don't have the money for it,
100%.
Potentially that is where you do have to take a loan and do all this sort of stuff.
Time and place for everything, 100%.
So it's not that all car debt is bad.
No.
But
it's expensive though.
It is expensive. But maybe it's not $100,000 one, maybe it's a secondhand one.
Yeah, correct. And I mean, you look at it, when you go into that scenario, you got to weigh it up. You got to say, all right, I'm going to get this $100,000 car. I'm okay to pay the 14% because that's what I need to do because I need my cash flow. The 100% best argument you got. Someone comes to me and says, I want to do this because I need the cash flow to grow my business or do this and this. Great. But looking at how much those repayments are, because they get you to, they say, the repayments are $1,000 a month, but over 7 years, so you're paying a lot more for that car. That was $100,000. Now you're paying $130,000 for that car. Again, okay, we claim the deductions we can. We get a little bit of benefit from that. But the quicker you can pay it down, the better too. Like there might be a payout fee at the end, but if you can pay it out quicker, you're going to save a shitload of interest. So again, it comes down to management of that cash flow. Once you've bought it, have the aim to pay things down quicker if you can. If you are only meeting minimum payments and everything else is struggling, maybe it was above your budget anyway. So you've got to think about that too. But I've had the mindset of trying to pay my house down quicker, but then the interest rates went up by 7%, so that didn't work either.
You're like, well, that's how much I was planning to put in, so I guess we're here now.
It's not going up. It's not going down. It's going up. So, I think the main thing there is understanding your limits. If you need to do it, 100% do it. That's not my. I'm definitely not saying to people don't go and buy things they need and how they can do it. Just manage it properly. That's my biggest takeaway, I reckon, from the day.
Yeah.
There's something, it's sort of just come to me, so I'm going to probably blindside you a bit here with it.
Perfect.
So the whole super tax, all this conversation we're having, so a lot of guys, they're probably going to know a little bit of it, but not as sort of deep as what you're going into it. Myself, for example, I never learned any of this shit in school. Why do you think that, I guess kids aren't being taught this, or it's going to take them listening to this podcast, for example, to be able to learn about this shit? Do you think that's a bit of an issue, that it's not such a common thing, or?
Yeah, I can't speak for everyone, but there's definitely a lot of business owners we deal with that are fresh. Like they've got really good ideas. I think you mentioned at the start, Maddie, around, people have got their niche. They understand, I know how to go and build a house.
Yeah.
Or I know how to sell stuff on an e-commerce website. I'm really good at that, but I just got no idea about the finance. And I don't know if that's from upbringing or whether they didn't take the classes or it just isn't provided enough. I'm not sure around that side of things, but definitely as a business owner, you definitely need to know your numbers. If I can say anything about to a new business owner, it's know your numbers. But it's the last thing people want to invest in. They want to go and get their stock. They want to build their website. They want to do all these things. And they're like, even to the stage where they're like, right, this is a structure you should go through. We've done the thing and you should go through a company because of asset protection or because of a lower tax rate. You've got employees. We can tax them in the company. Some people don't want to spend the couple of grand to get the company set up. Like, if you're going to go into a business, know all these things and invest in the right things.
Yeah.
So building that foundation, it's that entrepreneur lifestyle. I mean, we're based on the Gold Coast, one of the entrepreneur hubs of Australia. But there's so many people that are so good at certain parts that don't have the knowledge in this other part. If you can't get it inside your business, then outsource it. You know, accountants, I think there's a misconception that accountants just lodge tax returns to some people. But we're bigger than that. We're better than that. It's actually probably the least likely thing we want to do. Yes, we do it, but the biggest part is getting people inside, outsourced or inside your business that know the numbers that can help you with it. It's just it's that main thing that is going to drive your success of your business.
Or even going back to sort of what you were saying, how like most of the stuff that you do is just so much more than just obviously lodging a tax return. It's
important, but yeah.
Like, so what else do you guys do at boutiques? Obviously, you have a plethora of a shitload of stuff.
I can probably speak on a bit of it because I've been working with Jason on like a lot of my personal stuff. So you helped me go through a remortgage. I refinanced my house, got better tax rates. We got some cashback offers, stuff like that.
So that's through our boutique wealth arm.
Yep.
So financial planning, insurances.
That's a guy called Jake. We might get him on at some point.
Yep.
He also helped me set up like my life insurance, total permanent disability, things like that.
I don't have any of that.
Yeah, so I got all my insurance. He set it up getting...
And the thing you'll find with that too is you're paying for a new super fund. Jake can have a look at that, potentially save you money without costing you anything.
Yeah, he set it up. I'm paying through my super fund. It doesn't really cost me directly. I think it's marginally out of the super, but it's not that much for the coverage that I have. That way, if I go, the house is looked after, family, whatever.
Yeah, see, that's wild that, like, because you've been in that space, you sort of know to do all that stuff. Like, you know, got a missus, got a house.
I had to pull his arm a little bit.
That's the start of it. So, obviously, trust funds and stuff like that to better manage asset protection, businesses, companies, stuff like that. Helped us with the charity as well.
Yep.
Obviously, all the accounting that goes behind the scenes of both the business and the personal. Like, honestly, just being able to talk to someone and know it's in their hands and they're going to do it correctly, but also like guide you through the process. I've learned heaps in the last 3 or 4 years.
So that's our two of our main businesses: accounting, financial planning. So the financial planning arm is financial planning, investments, self-managed super fund, insurances, all that sort of fun stuff. Accounting's all the compliance, advisory. We've also got a consulting business, which is more that cash flow modelling, CFO outsource sort of stuff. So those people that have got bigger businesses that go, how do I do this stuff but not have someone in-house? That's that CFO outsourcing, or fractional CFO they're calling it now. That's a big part of our business moving forward. We also have a creative arm as well, which is pretty exciting. So videography and photography. So a bit of a mixture.
So if you need your accounting done or your wedding filmed, he's the man.
Yeah.
Done.
Or a brand story for your business. There's all these different round things. But yeah, like I'm big in the accounting space and the consulting space. So they're my two passions.
Sweet. On that note, I think we're going to have to wrap this one up. But that's been the Better Bloke Tax Time special.
Awesome.
I'm sure there'll be a bunch of comments. Let us know. What else do you want to know about personal tax or business in general? We'll get you back, or we'll get Jake on the financial planning side of things.
Yeah, more than happy to come back anytime. It's been great.
Cool. Make sure you give us a follow, Better Bloke Project, on everywhere: YouTube, Spotify, Instagram, TikTok, LinkedIn. We're all over. You can watch and listen at the link tree in the bio. Make sure you,
Don't forget us. be better. Thanks for tuning in to today's episode of Better Bloke. If you got anything out of it, show some love by dropping a 5-star review below.
If you want to learn more about everything we're doing, head to the description, hit the links and follow us on the socials. If you want to learn more about the project, head to betterblokeproject.org.